Welcome to Apex Invest. Okay, let's look at PZ, their books, and see what is in there. Okay, the headline reads PZ Cussons Nigeria reported a revenue of plus 47.6% and EBIT of that's earning before interest and tax margin of close to 36.6% in their full year Q1 full year 2026. So there's one thing you're supposed to know about PZ, that is the note we wrote there. PZ don't use a normal fiscal calendar year. So their calendar year normally starts from, like this result now is June of 2024 against I guess May of 2025. That's full year 2024, full year 2025 that ended in May. So it's interesting. So that is the last full year result. In case you see other further analysis, then it will not be on their quarter on quarter. So there are many reasons why they don't do Jan to December. There are reasons also. That's not what we are here. So in case you're watching, so this is their last full year. So you get a sense. So here is the thing. The first thing first is that they have a positive cash flow, a free cash flow of closely, if you overlay it year on year, they have a full cash flow of free cash flow of close to 36 billion in 2025. So let's look at the numbers and see what it looks like. So let's dive in. Remember, this is our X page. You can always go follow us up on X, download these graphics for yourself and use it for your decision. Add it to your decision making. So this is their income statement. So this is the income statement side of things. So they are still part of this result where you see some quarters. So that is just get a sense of what it looks like. This is the struggle you have when you are analyzing a business that doesn't use a normal calendar fiscal year, but it is what it is. So revenue grew by 47, like we said, over 59 billion. Gross profit grew over 15 billion. Then any operating profit now grew over 21 billion, and net profit grew over close to 13.5 billion. So there is reasons for that because of where they were coming from. So if you look at the graphics, you see, if you compare it to 2024, so they had more revenue, they had more. So let's just dive in. So let's not take time. So if you this is 2024, this is 2025, you see the percentage difference. So more revenue in 25, more cost of sales in 25, but also more gross profits. Then if you start going down, if you middle line, you see that naturally, because it's an inflationary environment, so you see that the expenses also are all looking up. They are all looking up. But one thing now totally changed. The business now swung from a loss, operating loss in 2024 now to profit. So operating loss. So one of the things that buffered it is this other income. And if you break it down, this is where you start finding the likes of FX doing the heavy lifting and some leasing they did. So we are going to talk about that. But this is one number I want you to hold. This other income of 12.2 billion is what changed the trajectory. That's why that headline says if you strip out, you see the difference. So then you get to the finance cost side of things. You see also that the finance cost dropped magically to now 200 million from over 1.something billion, because there was also some intergroup non-interest loan that was given to them from PZ International. So those things did some heavy lifting for them. Then if you go to the profits, the bottom line now, you see that the net profit now swung from negative 4.6 billion now to 13 billion. So it's now a swing. Remember, they suffered FX devaluation. The FX devaluation hits their book in 23-24. So 25 now became a recovery story. Now EPS now swing from negative to loss. So if you look at the ratios, look at the key ratios, you see the difference. So you just go look up there. So let's look at the balance sheet side of things. See? Okay, so this is what the balance sheet looks like before we now give you the stories behind that you can find in the books. So for the balance sheet, you see the asset side of things, equity, liability dropped, and there's improvement in equity, but there's still a negative equity. So let's just go that way. So for the balance sheet, what we used was May 2025 and August 2025, which was now reported in that annual report. So it's more of a Q on Q overlaying. So for the balance sheet side of things, you see that the assets of the business grew more to over 183.5 billion. So that is the balance sheet side of, but equity is still negative, but it is a kind of tapering down. That is why in May of 25, the equity was negative of minus 17.3 billion, but it's now, due to that earnings that came in, it's now down to minus 3.5 billion. So we analyze further results to see if they have totally exited this negative equity. We still analyze all their quarterly results, so that's why you need to look at it. So it's on a recovery path. Then if you look at so that is what the equity looks like. Then if you look at the total liability, the liability grew a bit. So then that is why if you look at some of the ratios, they are just flashing red. They are flashing red because of the recovery story. So what really happened to PZ? So this is it. So now these are the things you need to know. Number one is for the cost side of the business. In 24-25, there was electric tariff increase in Nigeria. So electricity tariff increase, especially if you are in Nigeria, they put their electricity users in a band. So you have band A, band B, band C. So most of these manufacturing companies, they are in band A. Of course, A means there's close to 20 hours power supply. So companies tend to go to their band, they source for their band. So there was an increase. Imagine the electricity cost jumped from 2 billion to close to 5.5 billion. So that's added to the expenses we are seeing at a time. That is the first thing. Then the second thing is that this PZ has two major segments. Number one is their home and personal care, where you see the likes of those, their soap, oil and stuff like personal care and the home care. Then the other side of the business is their durable electricals, where you see their thermal air conditioner and stuff like that. So for those two segments in 25, the margins are still thin. Then their export doubled, but majority of their customer in their export leg is the Ghana side, PZ Ghana. So they sold, of course, Nigeria is the manufacturing hub for West Africa. So manufacturing hub for West Africa for PZ though. So PZ is pretty everywhere. So they now exported to Ghana whatever they exported to them, some unfinished goods and stuff like that. So it's clear to know that. Then another thing that also is significant to recognize is that there are no tab. No tab simply means National Office for Technology Acquisition and Promotion. This is where you pay for a kind of consultancy research and stuff like that, because remember, the parent company is just a subsidiary, so the parent company also collects some of those research and development fee, royalty fees and stuff like that. So the royalty fee now in 25 was close to 3.9 billion. So it's interesting to know. It moved in 25 now, it moved to 5.6 billion as against 3.9 billion. Now, another thing to note is that as they were exporting to Ghana, some of their raw material came from PZ Singapore. Actually, some of them they cannot find locally in Nigeria, so they import some of these things from BZ Singapore and other BZ. So it was in the tune of 92 billion. So it's also interesting to watch that line. Then remember that we told you that they received some non-interest loan from BZ Holdings, which was in tune of 40.2 million US dollars. So which is, imagine receiving a loan without interest. So it helps also. So that is why I found it. Then some things that help to prop up the book is that they defer their tax. Of course, you made law, so you're not supposed to pay tax, you defer it. Then they also, another line to watch is that provisions were made. So provisions were equally made, especially for that electricity arm of the business in their Thermoco. That here Thermoco, so they made provision for the warranty provision, because there's always warranty when you're selling an electronic product. So the provision was double, so it's interesting to note that also. Then the business also leased out one of their adjacent tower. They lease it out and make some money from it. So the final verdict on this business is this. You say that this business is a business in an active post-shock repair. So the FS shock. So they are in that repair stage with real operational improvement. That's why you are seeing the earnings coming up. But the balance sheet structure still remain externally dependent and FS fragile. So that is why, remember, they have not exited the negative equities. So that is the summary of what you can say about BZ Nigeria. So you read up more on this. Like, share, subscribe, and comment. See you on their quarterly results. So let's see what they started doing in 26. See if the recovery is coming up or whatever it may be. So that is it. See you on the next one. Peace.